Welcome back to the channel. Right now I have this chart of Nifty 50 and this is a 30-minute chart of the index, and previous trading previous trading session was on 24th of October. Yes, so I did really make a video on that day wherein I was somehow of this view that we would be ending wave D around this range of 25,700 to 750 range, and then after completion of wave D we were of this view that we are essentially heading higher towards wave E. So that was my primary view, and so far so good. The market really obliged my primary trading view, and it looks like we have already started going higher in wave E, and we have started to make some kind of minor waves in wave E as well. So I could very well label this as a minor. Let's for just for the sake of simplicity, let's label this as a very small a, and this minor dip as very small b of this meaning an intraday dip. So this means that you just did wave A, like you did wave A over here, and then you did wave B, and then you are going to head higher, wherein you would complete A, B, C, D, E, and that would mean that after the completion of A, B, C, D, E, you would complete wave E. So that gives me another maybe 3 or 4 days of up move to just finally conclude that wave E might be over, and you would have some sort of sideways movement, sideways correction price wise or time wise before we actually head higher towards 28,000. But before that, what I am currently prioritizing is this movement A, B, C, D, E. So are we done with this intraday dip? Maybe or maybe not. So the 40 moving average was around 25,926. We did really go there, and we just bounced from those lows. But just in case we were to go a bit lower, 20 moving average comes in around 25,888. Let's round it off to 25,890. So even if we dip a bit, let's say 70-80 points down from here, you'd still be in some sort of B, and then when you eventually head higher from here, you'd start to expect that you still have around 500-600 points of up move in wave E. So yesterday's video, or I mean on 24th of October, I made this very clear that my target would be based on the length of wave A, and I took this length and added up to the lows of wave D, and then I got a target which is somewhere around 26,350. That doesn't mean that the moment market approaches 26,350 I'm going to cut all of my long position. It just gives me a brief idea of where I'm expecting wave E to end. Does that mean that we are going to go till 26,300 and then all of the sudden we are going to end wave E? No, there are a lot of possibilities. There are possibilities like wave B, after the completion of wave B, wave C extends, then you go sideways, and then even wave D goes sideways, and then you even extend in wave E's of E. So there are multiple permutations and combinations possible in this market scenario. All in all, this is buy on dips kind of market, and I am expecting at least 26,500 to 26,700 zone in a couple of days. Then maybe you go sideways from there, and then you start another leg upside towards 27,000, 28,000. That is my view. If I were to look at bank Nifty, yeah, so this is a fabulous chart. So I was making 24th of October video over here around 1 or 2 o'clock, yeah, and we essentially made a bottom just at wave D, and we are currently starting to head higher. That just means that you are heading higher in wave E. There's a very strong moving average resistance which comes in around 58.69. Let's take it around the zone of 58,100, and the moment you close above that, there's a clear-cut confirmation that you are going to head higher in wave E. The targets would be essentially the same as we calculated in Nifty. The length of wave A added up to the bottom of wave D, which takes us around 60,000 zone. But let's just not constrict ourselves to a specified number. Let's just go with the flow, go with the idea that we are going to head higher. But all in all, 60,000 is one of the levels that I'm looking at Bank Nifty. Once we reach there, I'd like to review what really is in store for both of the indexes. I think that was it for the video. Thank you.